Alright, so in this video, I'm going to go through the 950 1010 macro long that I've took on Thursday, the 13th of February 2025. But before we get started, I just want to tell you a little bit about myself in case you do not know me. My name is Stan Alin, and I've been predicting and documenting the Nasdaq since 2023 onto 2024 and onto 2025. And I plan on doing it for as many years as possible until I cannot mention the years anymore. The reason why I do these videos is for documenting purposes, as you can see, dating back to 2023. And if you go through the executions that I've did upon 2023 and compare them in contrast with the 2024 and 2025, you're going to see a lot of progress, and these serve as you, the people that are watching me, and myself to again see the progress and to let you know, or let myself know, because I'm doing this realistically for myself. Let me know how I progressed through hard times, through the best times, and what each specific time gives me as a lesson and as a characteristic of said period of time. So what was my perspective back in 2023, compared that in contrast with 2024, 2025, and then thereon try to expand upon years or decades of comparing and contrast. I also want to tell you that I have an ongoing private mentorship, which is named the Stoic Capital Private Mentorship. Our mission is to help ICT students develop execution mastery, and our perspective is at the same as mine, as a lifetime career as a trader, and this was established back in March 24, but I've had students which have helped become excellent since December 2022. Of course, my ways of mentoring are or have progressed since then, but here's where you will find information about the private mentorship in the left side, and about me documenting the process in real time on the right side on X at Alin-SDO with double O, and at Student Capital. And let's get into the video. I also want to mention the fact that I have uploaded my previous private mentorship lessons for free on YouTube, which you'll find inside of a playlist inside of this YouTube channel. I'm planning on reopening this type of private mentorship inside my private mentorship in itself. I've tried to do one-on-ones, but that requires a lot of attention, and it is still going to be a one-on-one based mentorship, but I will have both a general perspective upon the lessons, because I do not have to say the same thing for every student. There's going to be general lessons that we're going to have inside of the mentorship, and then we're going to amplify upon them on a one-on-one basis. So it is both a general and a one-on-one mentorship. If you want to get inside that, and this is the last thing I'm going to say about this, you can DM me on Telegram and we can see if you are a perfect fit for this Student Capital mentorship, because I've had students which were unwilling to learn, and I have had them as a student and they did not do the work, and it of course resulted in a non-profitable venture for them. And then I don't know if they blame me or not, because I haven't kept in touch with those people, because I do not want to be around these people because of energy sharing type of stuff, but I'm not going to get into that right now. Let's just get into the video. So the 950 to 1010 long, which occurred within the 13th of February 2025 on Thursday. So the first thing that I do within my week, what I do is I check the high impact news drivers for my weekly perspective upon the chart. So for this specific week, for the specific week of February, the second week of February, I have also told my private mentorship students in a one-on-one session or a one-on-one amplifier because I've recorded a video. It was not a one-on-one session in itself where the student would listen to me talking. I've instead just recorded a video. I've stated in November 2024 the fact that our trading year, so the same thing that I do on a weekly basis, I also did for 2024 on a yearly basis. For the trading year, I'm looking forward to looking for February week 2 onwards. So I'm going to filter out, and I filtered out the majority of the January 2025 month, and I told my students to primarily and directly go into the second week of February. So, for this week in particular, the first thing that I do, and of course for every week that I look at, is I look at the High Impact News Driver calendar. And I'm looking for weekly impacting high impact news drivers like CPI. And this week we've had the CPI week, so the CPI profile is going to be in place. Well, I will choose to only trade after the CPI event because I anticipate the best days to trade within my bias and my narrative for the week to be after the CPI event, because within the CPI event I anticipate the market to create the weekly manipulation. So on Monday, Tuesday, and Wednesday, I would want to see the market create the accumulation plus manipulation for the week. And later on, after CPI, I'm going to look for the weekly distribution, which, of course, without a chart, we do not currently have a weekly bias set in place because this is the first thing that I do. But what I do is I pre-select the days in which I'm going to trade, and I'm only going to look at those sessions because I try and filter out all of the non-directional trading. Of course, this year I'm going to also go into intraday volatility trading, which means that I'm going to try and trade those days which are based on consolidations, and they are going to be traded with intraday volatility specifics, which means that if the market goes above a level of buy side or below a level of sell side, then we can seek the opposing run, and we can take short-lived runs, and we cannot expect the market to move much. But I focus primarily on one directional trading within my one directional weekly bias. And with that, I'm going to pre-select the days in which I'm going to trade based on the economic calendar. So I do not have a narrative. I do not have a perspective upon the week. And before we start, this is what I do. So I look at the high impact news drivers. I pre-select the days based on the high impact news drivers, whether they're weekly impacting or they're not weekly impacting. And for this specific week, I chose to trade Wednesday, Thursday, and Friday based on my CPA specific week rules. And after the CPI at 8:30, and then Thursday at 8:30 after the PPI and after the 8:30 retail sales. So the specific trade that we're going to look for today is going to be the Thursday after the core PPI at 8:30. This was my analysis before the market had performed the trade that I'm going to talk about. As we can see, prior to February week 2, we've had a major consolidation within January and within February week 1. And my bias for the first quarter, or for the first months of the year, is going to be, or was, and still is, bullish. And for this week, I was looking forward to trading into the previous week's high, the lower quadrant of the breaker, which is the 25% of this candlestick here, the constant encroachment of that breaker, which I wanted to see as a weekly target. And of course, that would mean that we would go above the January 25 buy side liquidity. And if we're going to go above that, because we've already been here, and because I anticipate the market to start the expansion to the upside to take the year of 24 buy side liquidity, we're going to also attack that. Perhaps, and this was my premise, perhaps we're not going to do it throughout this week, but I have a primarily weekly bias and a weekly narrative. So what this does is it gives me perspective in terms of what I want to see from the market do in terms of institutional order flow signatures and what I do not want to see the market do. So instead of this specific day, because we've had Monday's trading, Tuesday trading, Wednesday's trading, in which we can see how beautifully the CPI took Tuesday's low, we've had the market creating a swing low here instead of this busy. And we know, or I know, the fact that when the market goes back into a busy, it makes it efficient. For this busy to be balanced, we have to leave it. We have to take on a swing high. But what I do is I anticipate this to become an intermediate term low, which means that until we trade into this target or my target, this has to sit in place. So this would be a point in which I would not want to see the market go. I anticipate this low to stay in place. As I've seen the market closing above this busy, again, I'm only looking for bullish signatures, and if the market closes below them, of course, my scenario is invalidated. I'm going to look for reversals or I'm going to stay sidelined. But basically, for this day, I've saw the market closing above the daily reclaimed busy, and I wanted to see that being used as a means of quote unquote support. Also, this order block because we're trading within an expansion, and we can see the fact that the market closed above the reclaimed busy. Again, the bodies tell the story and the wicks do the damage. So the market indeed went back into this busy and back into this volume balance right here, but we did not close below this reclaimed busy, which gives me a sign of strength. And again, this low is intact. We were trading at the constant encroachment of this wick. Market went back into this order block and it rejected it. So for this day, instead of this specific time, I saw the market opening, going back into the 75% of this wick, which if the market leaves this low intact, that is a sign of speed or sign of strength to the upside. And it has also used the upper quadrant of this reclaimed busy. So normally, and this is what I saw, when I'm going into the session at a specific time, I would already anticipate the low of the day to be created because I would not want to see any lower price below this. But if the market would have chosen to take on this low, then I would have preferred for the market to only go back to the constant encroachment of this tail and reach for this level, the 50% BT 12-month fulcrum standard deviation, which is, let's just assume that this is a standard deviation. And again, a standard deviation is just me deviating a range, but I'm not going to get into the specifics of that. I've already talked about this in my private mentorship lessons. But the BT levels are from this level to a specific level, the 50% between those two. So this is what this BT stands for, between targets. So this would be the lowest point in which I would want to see the Nasdaq go if we were to go below this low, but I would prefer, or I would have preferred, for the market to leave this intact within the AM session, and I would have wanted to see the easy targets of the previous weekly high to be taken, the January 25 and the year of 24, if we were to get into that within this week. So what I'm going to do instead of the hourly chart is I'm going to again look for the market in a one directional bullish perspective. So this is a back test. This is not real time. This is not before the market opened. This is after the fact, but I'm going to explain what I saw when I was looking at the market. So basically, coming into the market at 8 a.m. or 8:30 after the core PPI numbers were out, as I've told you, I was looking for this daily low to stay in, which that daily low inside of the hourly chart is seen as this. And as I've told you that I'm looking primarily for bullish signatures and I'm going to see the market within a bullish perspective. What I was looking for in terms of the market taking on this high was a market structure shift. And as you've seen, or if you do not see, I'm going to explain it today. As you've seen within my market structure lesson, we've had the market taking on level sell side. We've had the reversal, the algorithmic phase of the reversal. So I was anticipating the market to retrace back into some inefficiency, which could have been this, or a lower time frame 15-minute inefficiency. In this case, I've took this inversion gap. And after this retracement, because I do not expect the market to go below that low, I have a bullish perspective. Remember, I consider this not as a market structure shift. I consider this as a previous PM session sell side liquidity pool being taken. And this gives me the fact or the insight that the market has to continue higher to expand higher towards the targets that I have told you about. So this, because I have a bullish perspective, this is not a market structure shift. This is just the level of sell side being taken just for the market to continue higher and to expand higher. So this would have been seen as an order block, and my trade was based on a 950 to 1010 macro. So this is a 1 hour chart. This is the candlestick that is responsible for the 8 o'clock to 9 o'clock time period. So the 9 o'clock to 10 o'clock candlestick starts here. We open, of course, instead of the lower time frame chart, you will see the fact that the market went higher, taking on this level of buy side. Then we went lower. But when we were trading here, I understand the fact that this is the manipulation that is done for the candlestick of the 1 hour chart for the hourly basis. And when the market goes back into this order block, I do not expect the market to go back below the min threshold or the swing low or the swing low. I anticipate the market to go back into this and to reverse and start going higher into these targets here. So when the market goes back into this, I'm going to go into a lower time frame chart, anticipate the market to shift between a specific time period, which is going to be a macro time period, and I'm going to aim for these levels. But if the market would have violated this and this by closing below it on a 50-minute basis or on a 5-minute basis, then I would either stay sidelined or reverse my idea for this session or for this week or for this particular day. But given the fact that I'm correct and my bias narrative for this specific day is correct, then when the market goes back into this, I never expect the market to go back below this order block because we are within an expansion because of everything that I've stated before, including the daily chart. So when the market went back into this order block, what I would do is I would go into the 1 minute chart, and this is the same movement. So 9 o'clock starts, 9 o'clock opening price. This is how I determine where the market is in terms of the hourly accumulation, manipulation, and distribution. Right here, market creates the manipulation, takes on the level of sell side, which tells me the fact that if I'm bullish, then we should not see the market go below this low. Market continues higher, 950 to 1010 macro. My model states that I will take an entry based on an inversion gap, and you will see this exact entry on many of my executions on YouTube. But my entry states the fact that I'm going to take something prior to the 950 to 1010 market structure shift because I already anticipate and I quote unquote predict this to occur based on everything that I've explained before. But basically, I again would not see this as a 1 minute market structure shift because everything that I've talked within the 1 hour chart. So this is just a level of sell side being taken. I know that this is where smart money accumulates longs. So the market should not go below this low. We can see how the market comes back into this inefficiency here, the upper quadrant, leaves it, trades as or at this CB, goes back into this BISI, which I know that if we are correct, then we should not cross this BISI and we should close inside of it, and we should use it as a means of bullish support, quote unquote support, of course. Order block here, market closes above this BISI, which I anticipate for the market to create as a balanced BISI because the market went back into the BISI, making it efficient. And then when we leave it, this is a balanced price range. So the market should not return back into this or should not close below it and use it as a means of resistance. If it does that, then I'm incorrect and my bias is invalidated. But my sign of, okay, getting to a position was the fact that the market went above this inversion gap. And once, of course, I anticipated this when the market was trading here, I anticipated this to be an inversion gap. I entered long, placing my stop below this, which is below the mean threshold of this order block because of everything that I've explained to you. And if the market would have went below this low and into the lower quadrant of this order block, then I would have been wrong, and I would have been grateful for the fact that I've had a stop to stop me out before I could incur even a bigger loss. I also want to state the fact that this was a signal that I've sent into my private signals, but I am going to only give these types of signals to one of my private mentorship students that paid me, because I do not believe that I'm ready yet to give signals, and I don't know if I'll ever going to be, because I believe that that takes away my focus from the market and how I perform naturally and normally. So I do not want to get my trading in trouble just for the sake of giving signals. But for my private mentorship students, what I always tell them to do is to wait for the market structure to shift between 950 and 1010, which is the first sign that the market switches from a sell program into a buy program. And my profit objective, because this was a signal, and this was my first signal from or since 2024, was the easy to see, easy target 1 minute inversion gap high, and I exited my full position there. But as I have backtested this, and if I was to trade solely on my own perspective and my own narrative, and if I was not to give signals, I would trade the entire movement onto the standard deviation, which is again this range deviated to the upside, or even this range deviated from the to the upside. But I took this range and I deviated it, and I got this level, which also correlates with the 50% between this buy side liquidity pool and this target. So this is what BT stands for. This is 25% between these two, 50% between these two, 75% between these two. And I would have targeted this, and this would be my full profit, knowing the fact that the market is easy to reach or has easy reach until this high. And how I would manage this position if this was only me trading based on my own premise, and if I was not given a signal, and if I was in normal parameters, would be the following: buying here, stop here, market trades above this high, creating market structure shift within the premise that I've had within the 1 hour chart. So we should not see the price go here. Once the market trades above this, this is a swing high, which tells me that this BC is now balanced. So we should not see the market go below it. There's no reason for the market to go back into this range until we reach this target. And if I'm correct, then the market should not trade into this. So this now becomes a balanced price range dealing range. Market goes back to the Gaussian encouragement of this wick, trades higher, auto block as we're inside of an expansion, and it also closes above this 1 hour inversion gap, so it can be used as a means of support. Market goes higher, breakaway gap here until we reach this target, which is a good sign of strength. Market goes back into the 1 hour inversion gap high, never trades back into this BC until we reach that target, which is a sign of strength, until we reach this high, and also the 25% BT, which again, 25% between these two levels. And as the market reaches this, then I know that it is possible to see a retracement. So what I do is I measure constantly 3 PD arrays, and if 3 PD arrays are going to be violated, then I'm going to get out manually from my own trade, and I'm going to be content with everything that I have taken. But this would be the first, this order block would be the second, and this would be the third PD array. And if the market went below it and closed below it in an aggressive manner, then I would have exited manually, and I would be again content with my final partial to be here, and for me to be quote unquote stopped out manually inside of this PD array. Because if this would have been violated, then it would mean that we would go back into the sell side, and then this sell side. But if we're correct, then this should be a balanced price range dealing range. Here, busy, this should be only seen as a sell stop rate, back into a busy. And as we can see, the market went back into the inversion gap in which I've entered, and it quickly retraced back into this busy, which gives me a sign of strength. Again, market goes back into the cost encouragement of this tail, this busy, and this order block, and also within the upper quadrant of this 1 hour inversion gap, which again is based on a 1 hour PD array. And also this is a sign of strength because we did not reach back into the cost encouragement of this inversion gap, and this tells me that the market is not even weak to go into the cost encouragement. So by extension, this is a strong market. Market closed above this busy, which I anticipate to become again balanced because we went back into it, making it efficient. And then once we leave it, that is going to be a balanced busy. We create an immediate rebalance, which tells me that the next 2 to 3 candlesticks should be sent higher with speed. This becomes an inversion gap because we've closed above it. So I would want to see that being used as a means of support, correlating this with the busy. And once the market trades above this high here, which has multitudes of signatures, for instance, I would want to see, when I'm looking at price instead of every singular candlestick, by the way, I'm looking at every bearish PD array to fail and every bullish PD array to be used as means of support. We can see the fact that the market closes above the consequent encouragement of the wick, which tells me that we can either use it as a means of support to send price higher into this newly created high, which I do not want to see in place. But the market does not even do that. It opens with the volume imbalance, which gives me a sign of strength. And as we've closed above the 25% BT, as I anticipate the market to go into this price point, I want to see the market use it as a means of support, sending it higher into the next BT level, which is also correlated with a standard deviation. Market trades above this high. My stop would be below this busy or even here, because we should not retrace back into this range because we've done the work to retrace back into the busy. We created an immediate rebalance, which again tells me that the next 2 to 3 candlesticks should perform higher into the 50% BT. Market does that beautifully. This would have been my final profit, but if this wasn't, then I would trail my stop loss below this here, because we would have 1 PD array, 2 PD array, and then the third. We could potentially go back into this if the market was inclined to do so, but I would not want to see it do that. I would not prefer to do that. But if it would do it, then I would not want to see the market close below this. And if the market would have closed below this, then I would want to be out because this would mean that we would go back below this. Market retraced back, closed below this, second PD array, and then the third here. The busy, you can see the beautiful bodies of these candlesticks remaining at the 50% BT, forming a swing low here, trading higher above this small inversion gap, using it as a means of support. I would want to see this fail. This is how I see price, which means that we should close above its mean threshold. The market does that, creates an immediate rebalance, which means again that the next 2 to 3 candlesticks should go higher with speed. And because we've reached the 75% BT already, I would want to see, if the market closes above this level, I would want to see the next level being taken within this session. And this occurs, market closes above it, use it as support. Again, support into the constant encouragement of this wick. And again, this is attention to detail. And everything was framed on the 1 hour chart. So if I would not have that premise, I would have never been able to see everything that I've explained to you. And I would not have the assurance. I would not have the, what word am I looking for? The confidence. I would not have the confidence to look for every bullish signatures to stay in place because I would not have the higher time frame perspective and I would not have the higher time frame drawn liquidity. the purpose of why the price on a 1 minute chart should perform said signatures. But we can see the market going into this previous 1 month high, and this would be the end of my session or my tape reading, or it will not be the end of my trade. Of course, in a hypothetical example, this would be the end of my final profit, but my standard profit would be at the 50% BT or even the 25% BT, because I and my mentorship students internalize the fact that we do not need much to be profitable, and we do not need to be correct to be profitable, because the market could have easily reversed from this point and we would be content with everything that we took, and we would be grateful for the fact that we've took the whole position off, because sometimes we can be incorrect. And if we're talking about my mentorship students entry, this wouldn't be it. This is my own model. It would be after the market has created the market structure shift, market retraces back into this busy, and then once we leave it, this would have been my mentorship student's entry, because he is based on an order block or an expansion order block, because we anticipate this to be a swing low. So my student Martino, he would have entered here or in some order block, even this one, as the market retraced, because I know that he prefers, and I know that he watches this video, but I know that he prefers this type of entry. And my student Joshua would take, and I would want him to take this type of entry right here, because he is an inversion gap trader. So this is my entry, 950, 10, 10. I anticipate this market structure shift to be in place. So I'm more of a sell stop rate trader. He is more of a continuation and more quote unquote safety, if I can even say this in the financial markets, trader. But basically, after the market closed above this, anticipating the market to expand higher as we went back into the busy, and we've done the work. And we also have beautiful signatures from this immediate rebalance to the closing above this inversion gap high, and also this newly created inversion gap high. This would have been his entry. Stop would be below the mid threshold of this, or even this candlestick's consequent encouragement, because he's just beginning with entries. And his target would have been for this, or even this. But I would be content with Joshua to take this trade, and this is his exact model. And for me to say this in the closing, here, inside of this Stern Capital mentorship, we do not, or I rather, because it's me, it is me who quote unquote mentors. I do not put everyone into the same box. I take away all of the details that I can from their personal schedules, from their life, and I try to make a model based on what they like, based on their own personal schedule, because Joshua cannot trade the 10, 50, 11, 10, or can barely trade the 10, 50, 11, 10 due to his time zone. And also, my student Martino cannot trade this AM session because his personal schedule does not allow the AM session to be traded. So therefore, he is a PM session trader. So here at Stern Capital, we make everything based on you and your personality. I, of course, give you the 950, 10, 10 or the macro entry time period. I give you the standard bias narrative perspective, because we're aiming for a one directional movement. But from there, it is your specific personality that is going to be used for you to become a trader for a lifetime career, because that is our mission. And if you want to see me document this in real time, I suggest, if you want to join my free Telegram, which is going to be in the description below. This was Stoyan, and hope you enjoyed this one.